This video will be a quick update for the S&P 500 as well as the dollar, the EURUSD, EURJPY, and EURGBP. I'll also discuss a couple of stocks really quickly in this video. This is going to be a short one. This is the E-mini futures daily chart, and as you can see, we have the time cycles on here. This is about 7.5 months in pink at the bottom. The blue time cycle is a little over 2 months. The yellow one is about 1 month, but we can ignore that. And the orange cycles are about 2 weeks. As I discussed in the prior video, the 2-week cycles on the E-mini futures chart were a little difficult to discern. However, using the 2-week cycles on the NASDAQ, it helped us determine this is no longer a cycle we're interested in. This one ran long. This one came in right on time. And we'll go take a quick look at the NASDAQ chart, and we can see exactly that. And this has been going on for almost a month or so now, where the NASDAQ cycles have been a bit more consistent than the E-mini future cycles. And as I discussed in a video a month or so back, that is what helped us determine this blue 2-month cycle trough was the 2-week cycle trough on the NASDAQ that broke below this prior low here. We did not get that on the E-mini futures chart. It was a higher low than this low here. However, using the 2-month trough from the NASDAQ, we determined this is the trough for this blue 2-month cycle. Since then, as expected, we have sold off pretty hard as we enter in a longer term potential trough zone, and we did bounce here. This bounce is nothing more than a bull trap. There is no reason at this time to believe this is a continuation of this uptrend. There is an alternate scenario where that would be the case if the 2-month cycle trough actually came in over here or over here, but both of these here and here would be a bit early, and all that would ultimately do is extend this pink cycle out to somewhere around late June instead of late May, early June, in which case we would still expect further downside. It would just take us a little while to get there. We are now on the SPX daily chart, and as you can see here, I have the long-term median lines I discussed in the prior video. And in addition to the expected trough that we identified from the NASDAQ, the levels from which we bounced are not surprising at all. So if we look at this standard median line set, which is giving us the yellow, this red median line here, which we just bounced from, and this lower warning line here, which I expect we're going to, based also on this standard median line set, which gives us the corrective median line set, they intersect at about our 2-month cycle trough, but our way down there is not going to be a perfectly straight line. And so again, using the expected 2-week cycle trough that we identified using the NASDAQ, as well as this zone here using this median line, this bounce is not unexpected. And the reason for that is, well, when we first approached this median line, we found some resistance. When we broke through it, we back tested it. Those are basic median line principles I've discussed in many videos. And so naturally, when we returned to this median line, we bounced from it. Again, considering the timing, it was not unexpected. I took profit on Thursday, the 18th, when we reached this median line, and I have since been adding on more shorts with the expectation, going back to the principle I discussed a moment ago, when you back test the median line, well, we have this longer term median line set up here, which is a modified shift from the COVID low to the 2022 high to the 2022 low. And so we have zoomed through that, and I expect us to back test this. We have come close enough to this where we could consider that back tested, but I do, using the dollar, which I will discuss shortly, think that we will actually continue a little bit higher for a little bit longer. At which point we should then, when the dollar bottoms, we should see the sell-off continue. So how can you trade this? Well, it depends. You can be aggressive like I'm being aggressive right now, and you can continue to add shorts as we move up towards this median line, which also aligns with a timing principle I've discussed in prior videos, where whether you're in an uptrend or a downtrend, you tend to retest prior cycle highs and prior cycle lows. So if we look at this 2-week cycle, this cycle began over here. It would not surprise me at all if we actually broke above this median line. This is a corrective median line set, low, high, low. So a correction you would expect to come to the median line, perhaps the upper warning line. In this case, I think we might break above it briefly to retest where this cycle began or where the cycle broke down. It doesn't matter how you want to look at it, but if we just put a general zone here where the cycle began to break down roughly here, and you can see this was also prior resistance and support that was tested many times. And then the upper end of where I would expect this bounce to go would probably be around here. Again, resistance, didn't quite test it there. A little bit of support, waffled around, found support before ultimately breaking down from here. So somewhere in this zone, I would expect it to be the lower end of this zone, but it could come all the way up to, this is 52.44. I don't believe it will get that high, but it would not surprise me too much if it did. So the aggressive way would be to continue to layer in shorts, giving them time. I would not buy short-term expiration shorts as we move up into here. I would be giving them time towards the expected trough time zone. I have May 28th on here, but that's not an exact date. It should be somewhere around this time frame. The more conservative way to put the shorts on would be using the 5-day moving average, which I have here in white. Once we close below the 5-day moving average, and ideally also take out a prior day's low, that would be a good signal that momentum is turning back to the downside, or that the time cycles are turning back to the downside, and it would make sense to go short there. The ultra conservative way would be to wait until this median line is broken. Once we close below this median line again, that will be the most certain we can be that we are continuing to the downside. Again, it doesn't mean 100% we are going to head to the downside, but that will give us more certainty than closing below the 5-day or breaking prior day's lows. This is the Apple daily chart, and I just want to touch on this really quickly. I had mentioned in the prior video how I added shorts back when we tested the 50-day. I closed all of my Apple positions as we approached this 2-week low. I closed them at the open on Tuesday, April 23rd. I made nice profits on those, and I had discussed how I was not sure how I would play this going forward. Considering the volatility of a lot of the tech earnings stocks, I will not be adding to this short. I do still expect us to move to the downside, but I will not be putting anything back on in Apple. It's a bit too risky for my taste. This is the PG daily chart, and I also just want to give a quick update on this. I discussed in the prior video I would close all of my shorts prior to earnings. I ended up closing half on the Thursday prior to earnings, and the other half at the open on Friday. And so that turned out to be a pretty nice gain as well. And as you can see, we've bounced pretty strong from there, and we have taken out this high, which now suggests to me that this pink cycle has troughed. And so while I am expecting the market as a whole to continue down, I don't think we will achieve this particular median line anymore, as again, we've taken out this high, which suggests that we are in a new pink cycle in a longer term maroon cycle. And so I do believe that when the market as a whole troughs somewhere around late May, I think PG will put in a higher trough than this, and that will actually be a potentially really good opportunity to go long PG if it is outperforming the rest of the market. I think what may happen is we may take out these trend lines, and that could give us a pretty large break to the upside. So there might be a good possibility to put on some long-term options if we do indeed put in a higher trough than here at the same time where the general market or the broader market is putting in a lower trough. It's going to show us that relatively PG is very strong and therefore might outperform the rest of the market, as I do expect the market as a whole to make a higher high before the end of the year. This is the DXY, the daily chart for the US dollar. And so there's something really interesting happening in the long term on the dollar. I wanted to do a separate video for FX this weekend because I really wanted to do a deep dive with this and its potential impact on the euro. There might be a huge trade setting up to go short the euro. However, I'm a bit pressed for time, so perhaps I'll do that next weekend or maybe during the week. But the long and short of that is we are in a massive uptrend, a very long-term uptrend. You can see I've zoomed out on the daily. I'd have to go to the weekly for us to really be able to get all of this in here. And you can see we have respected this median line, the lower warning line, multiple times, and we have not yet achieved this median line. So I do believe the uptrend in the dollar is going to continue. And we have begun a much longer term cycle where I believe we put the bottom in here. It is possible we do actually extend and the bottom comes in later, but I don't believe that to be the case. And so what is happening now is we are putting in a pink cycle trough. It's possible we actually did just put this in on Friday. I don't expect that. What I do expect is this will extend a little bit. I have this on May 8th, so it doesn't have to be exactly May 8th, just somewhere around May 8th, and it could actually extend beyond that. We could then shift this over with the trough around May 8th, and it could extend out to Wednesday, May 22nd. I don't expect that, but that is possible. And so what's happening here is when the dollar puts in this longer term trough, it should get a pretty strong bounce, at which point I do believe the market is going to sell off and bring us into that expected trough that we are looking at in late May, early June. And so for the euro, we'll go take a look at that now. This is the daily chart. I mentioned in the last video that I was looking for a 2-month cycle trough around here. We got it. I will put the 5-day on. We'll take the 50-day off. I don't care about that right now. We crossed and closed above it, and we have continued up. I did not actually take this trade. I took a different euro trade. I took the EURJPY, which fortunately has worked out extremely well. But the reason why I did not take this trade is because I am expecting that strength to return in the dollar. And in addition to the dollar's long-term uptrend, the euro is in a very long-term downtrend, and I believe, or I'm starting to believe, this much longer-term maroon cycle, I did not label it as coming in early yet, and now I'm starting to think it might come in late, and we will achieve the median line on this. It's kind of difficult to see. It's a modified shift. It's blue. Pivot 1, pivot 2, pivot 3. The upper warning line aligns with the yellow sliding parallel I have, which is just a parallel line of this longer term standard median line set as we kind of broke above it a little bit. And so you just draw a parallel line and put that along the highs over here. And as you can see, we did achieve this median line target here. This is the longer term standard set median line. We did achieve that. And then we rejected again up here, up here, and up here. And so if this is going to come in late, we sometimes get huge sell-offs when these longer term cycles end. And I have a copy of a move that came from the end of this particular cycle over here. We can see this long-term cycle when it ended, a massive sell-off. And then you can see this one would have been extremely difficult to trade. You'd think the trough is in here, but it bounced up and then had a huge sell-off again. That was the trough for this. And you can see these are not perfect cycles. Sometimes they're short, sometimes they're long, sometimes they're on time or pretty close to on time. But aligning this with the dollar suggests that, and you can see I have this note here, top based on DXY, bottom 5.8. That's a rough estimate. And so I've put that measurement on, so this is Monday the 6th, but I've put it at, I have a couple of sliding parallels here, which are for this median line set. And so you can see the original median line, we did just find resistance at that. I think we'll put in a trough that will probably come in right on this median line. I would not be surprised if we bounce right off of this. And then we put in, perhaps we take this high out really quickly, and then if the dollar does indeed bottom around this time for that longer term cycle trough, that's going to tell us that the euro is putting in a longer term cycle high, and we might get that massive sell-off which leads to, and again, this measurement happens to line up perfectly to bring us right to this median line. So because of that limited upside that I see based on the dollar, again, I did not take this trade, and I'm actually looking to go short the euro somewhere around this area, assuming the dollar puts the bottom in. The bottom in the dollar could be in already, again, on Friday. That could have come in. But if that's the case, I will not take this short yet. I want to wait and see this trough and then look to short it in the next trough. So if we do happen to come down here and maybe take out this low in this trough, that will confirm that the dollar has bottomed in the longer term. And then I can look for the bounce, and I can look to short that bounce before we potentially get. Now, this is a bit of an outside chance that we do get this huge sell-off. But if this is the next 2-month cycle and it does turn bearish early, we should get a pretty large sell-off, even if we were to only come down to this lower warning line of this particular median line set. That would still be a very profitable opportunity to go short. This is the EURJPY daily chart, and as I mentioned a moment ago, I did not take the EURUSD long, and that was because using the median lines, we had a better setup, a better risk to reward entry, or a higher probability risk to reward entry, I should say, on the EURJPY than we did the EURUSD. And that is because we were finding support at this long-term lower warning line, which we've loosely tested here, but then tested pretty well here and here as well. And then I'll take this shorter term median line set off for the moment, but then using this intermediate term median line set, which we found support, proximate support here, we tested it here, and then we just tested it here and we bounced off of it. So I opened it up on, actually I opened it up on Tuesday, I believe. And so I had a 140 pip stop, looking for 530 pips to hit this median line here. I actually did not get filled. I missed it by a couple of pips, which is fine at the moment. And then I have this shorter term median line set here, and we did break through that. I have just put this pink time cycle trough here, and despite the fact that we have potentially troughed here, and this is very early in this cycle, considering the massive move we've had in a short period of time, I do believe I'm going to look to take this off this week, as we might not get a big pullback into this first month-long cycle, but perhaps the second one, it will give us some sideways action, and we can look to re-enter there. Because quite often after a massive move like this, the upside becomes limited. And while it definitely is possible, if we look at some of these moves, it is possible that this could be returning up here to this median line, and there's still a ways to go. And depending on how long that takes, I mean, it could go another 500 pips. It could get there pretty quickly. It could take a long time. Considering the velocity of that move, I think I would rather just take this off right now. And the USDCAD is a good reason for that. We'll go to that now. I had discussed in the prior video how I would be looking for the 2-week trough, and then I would move the stop up. Well, this is exactly what can happen when you have a very rapid move in a short period of time. We actually got a minimal pullback for this 2-week cycle trough, but that was actually a good thing, because when you get a rapid move and then a minimal pullback, usually what happens is the next cycle turns out to be bearish, or at the very least it turns out to be a pretty sideways cycle. And so what I decided to do was, when we achieved this upper warning line, I decided to take profit. And as I've mentioned in a number of videos, I don't actually wait for it to hit the upper warning line or the median line or the lower warning line if I'm looking to short something. I will take the profit before it actually achieves it, because it just needs to get close. It doesn't actually need to necessarily touch the line. So I closed this out, and part of the reason why I was willing to do that as well is the expected bottom upcoming in the dollar. And we do have those cycles on here in the USDCAD. They're a bit different than the dollar, but they're very similar. And sure enough, despite some strength that is still showing in USDCHF and USDJPY, the USDCAD, which I had also discussed in prior videos, had in the past at least been relatively weaker than those US currency pairs. The USDCAD did indeed turn around and sell off quite a bit more. That said, despite the weakness we're seeing at the moment, considering the expected trough upcoming in the dollar, I will be looking at USDCAD, USDCHF, and USDJPY to go long. USDJPY was setting up really nicely, actually. It was staying extremely bullish despite the overall weakness that's starting to be seen in the dollar. And I was hoping that this would kind of just go sideways a bit more into this expected trough zone. That is not the case. It does bring up a bit of a question as to, with the amount of strength that just came in, it brings up the question, well, is this longer term cycle, did it trough here or maybe even here? In which case, when you get a minimal pullback like that, as I said a moment ago, the next cycle becomes a lot less trustworthy, where maybe it's kind of getting a blow off top before it turns bearish, or then at least just kind of goes sideways and there's limited upside. So I don't know if I will necessarily be trading the USDJPY, even though I want to be long anything against the JPY right now. So unless we get some type of pullback into the dollar's expected trough zone, I'm not so sure I'll be able to enter the USDJPY on a longer term cycle. Perhaps the shorter term cycles will be very fruitful, but from a longer term cycle, I'm not sure that will be a good entry opportunity. Finally, this is the EURGBP, and we have a potential short opportunity here. We have this median line set, which we actually just rejected from. I did not go short at this time, but what I am looking for is a trough coming up in the 2-week cycle. And then I'll be looking for that cycle to roll over, and that should present a good opportunity as we move towards this longer term maroon and this longer term pink cycle trough. I would expect we will return to this median line, which is moving down. So the way to look for that entry will be using the 5-day. And so whenever we put this trough in, hopefully we can cross and close above the 5-day. And then when we close back below the 5-day, that will trigger the entry. And depending on where that happens is going to affect what stop to use. But the most likely stop will just be wherever the high was above the 5-day moving average before we crossed. So hypothetically, if we're talking about over here, you get the cross and close here. If you shorted at this, so it would be the next day's open. This is too close, I would say, to the 5-day, so I would not put the stop there. I would actually go 2 bars back, and I would put the stop up here. And I know that looks like a pretty wide stop, but considering the potential, if we were to return to the median line somewhere down around these expected troughs, we'll go with the blue 2-month cycle trough down here. It's about 180 pips, and that would have been about 60 pips, giving you roughly a 3-to-1. Now, it's obviously going to be a little different whenever we do get this bounce and perhaps we cross and close below it again, somewhere around here, and then the top is up here. You might have a 40 pip stop. And at this proximity to the upper warning line here, I would feel very comfortable with leaving it there. However, if this does happen to sell off pretty hard and then we get a very small bounce and then we cross and close again below the 5-day, I would still take the trade, but I would be doing it based on the 2-week cycles. I wouldn't want to look to hold it necessarily for the entirety of this move, because you will, and you might get a waterfall sell-off like that, in which case you would be fine, because we'd want to be trailing it above the prior day highs. But what can happen is, if we look back over here, this is kind of a good example as we moved into this blue 2-month cycle trough. Well, we had been very bearish, but then ultimately what happens is you actually get good bounces that will take out prior cycle highs before continuing lower. So if you are too far separated from the original turning point, or you are too far separated from what should continue to be some type of strong resistance using the median line, you need to kind of play the lower cycles. You could roll the dice, close half of it based on a trailing stop, and then leave half to see if you do get another cycle that puts in a lower high, in which case you'll feel very comfortable about having kept half on with that initial stop. And then you could try to hold that through the rest of the cycle. Or you could just start to play the 2-week cycle. So that kind of depends a bit on the size of this sell-off, the size of the bounce, and where exactly that next top comes in. As always, thank you for watching this video, and be sure to subscribe for more.